The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi, folks. Basil Chapman. This is Friday, the 3rd of January. Tiger Technicians Hour on Fridays goes a little more technical based on the Chapman Wave methodology. I just thought I'd use this here. Look, I had to redo this because I was really busy at the time. So I just grabbed it and I did a notation. But this is the correct notation I was asked in my 1-minute chart of the E-mini. Yeah, look, that... I got even there. I was a little too quick, but there. So this started off very nicely right here on the 1-minute chart, just under the 200-period moving average. Look, isn't that a nice indicator? Look, 200-period moving average. And then it went peak A, B, C, D. In the Chapman wave, we want to get a buy signal upgraded to a D, and you want to use a 9-period moving average over the 14. Look how nicely that worked. And then what happened is, did I get fooled? I guess I did. Okay, something out there. Oh, that's a shame. That was a very nice move. All right, so now what we're looking at is it continues that green line and it goes to another D. Then it pulls back and that 9-period moving average doesn't even get close to the 14. Continues high to a doji high of peak E, double top. Pulls back and it goes pink, 9-period moving average. And what does it test? Exactly on the 200-period moving average. It goes to peak A, peak B, peak C, and now you've just, this 1-minute chart has gone to a D. In this beautiful, I didn't even have a chance to type, to draw it in. This is the cup formation. Okay, so I got in just perfectly over there, and then I put my stop in a little too close, so I got stopped out for just a little gain, but at least it's a gain. What can you say? I would have liked to have still held it. So this is what I do. Now I draw this in if I have time, and I find either the low to get a measured move from the last high down to the lowest low, count the number of bars, see if you can get the same number of bars on the right. Then I use an inside wedge target repellent line to go up, and that's the line. And I try to join them and see if it works, and let's see if this can work right here. Yes, it did. There it is. So we are now a little higher. All right? We went right to it and holding very nice. That's why I wanted to hold the darn thing. Anyway, I had to do that quickly. And now we're just pulling back a little bit. So that's the 1-minute chart. This is the same as if it was a daily, weekly, monthly, but this is 1 minute, 5 minute, going to a peak E, double topping here. And the... this is the 10-minute chart, went to peak ABCD from the low of last night, and then it went to a D at about 4:30 this morning at the 200-period moving average, pulls back, and now it's going to peak A, peak B, peak C, and it needs to get to, right there, it needs to get to 5965.75 was the high. So 5966 becomes leg D in the 10-minute chart. And then you've kind of completed everything. And now you start fresh to say, okay, what happens next? All right, I just wanted to show you because that's live. Now what I want you to do is to show you, look at this. Crude oil went into the right here, it's in leg D. I do not like it when D's come about below the previous D, and this is quite a bit below. But now I love the way crude oil, the 9-period moving average on the 12th of December went green, the 9-period moving average went positive green, and it's still green. The MACD was positive just a little bit about a day before that, and still positive. The relative strength index is starting to build very nicely. Not great, but it's really good. And the stochastic's finally in the 90% area. This is crude oil. And the on-balance volume, blue, looks very nice. Yeah, right? Not overboard, just getting, it's very good. So this bowl formation or cup formation has Chapman wave inside wedge, target, resistance line. Usually make it on the upside, dash green. So I like this. I think that crude oil is doing very nice. I don't think it's great, but I think it's doing way better than it was, because it was making lower lows and lower highs. This time it's gone to a D. Now, I would love to have had it break leg C above this high right here of the 8th of October, and the continuous contract right now is 27.36. I would love to have gone higher than that in a leg C. So a D says, now it's good, but it's not great. And this is a good sign. So that's the reason why we have an oil driller. That's part of it. And most importantly, I'm looking also disappointedly at an area that I thought would work. I'll talk about it. I don't mind talking about what doesn't work. I don't like to, because I would have preferred that it did work, but it didn't work. And I gave it 2 chances, and it was I couldn't do it on a fundamental basis. I did it what I thought was going to be a technical basis, and I'll talk about it right now. But just let me run these first. So let me do this again. So there's the Dow. The Dow's kind of struggling. Now it's only up 150. It was up 300 something before. Really struggling. Yesterday's move was the chance that it could do like a November 4th, 5th, and just push power higher to make a second arch formation and then maybe fail. But this is not good. It's given back a chunk. It's now only up 122. So it means that the Dow type stocks are failing, and that's not, I don't like that. Within that context, the weekly chart's still Friday, but I'm going to say up until now, the weekly charts are still showing that they're doing okay. S&P 9-period moving average in the weekly ahead, it went to a peak E, but the 9 is over the 14, and the price is over the 14, but it has tucked for 2 weeks out of 3. It's gone underneath the 14-period moving average. It hasn't closed there, but the day's young. And the weekly chart, the daily chart has got this dreaded H pattern, lowercase h, come down sharply, have a big rally, and then pull back. And what happened? We went to a lower low yesterday with a Chapman wave red Roman candle. So far, it's good that it's above the high of yesterday, because if at any point today, if it starts to trade for 40 minutes below 58.53, then it's going to retest yesterday's low, 29.53. That's the S&P. Not great action. Daily chart we've been talking about for a little while. Made a peak D in the daily. That was at the top. Right there, the Chapman wave inside track, repellent area at 99.97 on the 6th of December. Now let's go to the QQQ. Also kind of struggling here, up 461 at 514.84. Had a lousy session yesterday. Today's a little bit better because it went higher than yesterday. But look at the MACD's not good. The relative strength's not good. Stochastics at 17%. The on-balance volume is not good. And the 9's under the 14. A lot of work needs to be done to get that 9-period moving average over the 14. You'd have to see 520. And it's here at 514. So that's a lot of work. But the weekly chart still looks very good. Okay? Monthly chart looks very good. IWM, a little different. This has been in a sell mode. Had a 244.98 double top high from November 2021. And a peak D again, second peak D. And now it's pulling back. This one's struggling. Today it's a little bit better than the others. Actually up 0.65%. The others are not even close to that. No, I shouldn't say that. S&P is up 0.64%. Yeah, I'll be back. Basil Chapman, Tiger Technicians on.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, so I just wanted to show you, so peak D, remember that's where other things can happen. So the 1 minute chart, and E-mini made that peak D. This has got a peak E, but now it hasn't gone under the 14-period moving average in the 5 minute. And now I can say peak C1, C2, because it almost made a D. It didn't, but I can say, call it as if it made a D, C1, C2. That's the same technique that I use in everything else, just demonstrated in a much quicker time. And look, here's the 200-period moving average. It tested it before and had a fantastic move from the 59.39 area in the March E-mini S&P. Went to 59.65. Nice move, 25 points. And now it's come back and retested it. This is going to be very important. Does it break it this time, or does it hold it? So that's the importance, because if it breaks it, 59.34 will be the 5 minute 200-period moving average test and key support level. All right, let's go back to this. So a couple of questions. The question, so in the YouTube, is Basil has IWM tested and rejected the dreaded H on this daily. So look, it went to a lower low, it went to a trough G. So this G now is an alternate count G. I always say, when you get to a G, can you look at it and say, is it a G/C? Because if it is, you could still go to the D either on the downside or the upside. So let me draw in I'll make this bigger so you can see what I'm talking about. There we go. Oops, wrong chart. So I was asked recently, what about all those charts that you have behind them? What's going on? Well, I have some of them as backups. I have some of them as just techniques that I've used, and I like to look. When people ask me about certain moving averages or whatever that they use and they say they like it, I always say, okay, I'll try it out. I have it in the background, and if I like it, I'll use it. But most of the time, because I've done so much work with my 9-period exponential moving average and 14-period exponential moving average and 200-period exponential moving average, exponential is what I like. It puts the greatest weight on the last closing price. And then on the left here, you'll see this has, these are the most current big price movers. So NVR, NVR, I haven't looked at that. NVR Inc. There's your dreaded H. This one took out the left side low. It's trying to rally now. Peak A, B, C, D, E, peak E in the monthly chart. Yeah, I don't know what it is, but it's up 77 points. Oh, at 8,067. No wonder why I haven't been looking at this one. And then, what's next? It's got, Berkshire Hathaway, BRK.A. I'm going to go to the B shares. Dreaded H for me. See, this is what I'm really worried about. There are so many dreaded H's, and you've got round number. Look, Berkshire Hathaway. This is all America, right? This is the all American company. Well, it's not all American, but I mean it's all American in the sense that everything about it pertains to something in the economy, American economy, and important. 491.67 all-time high Berkshire Hathaway B shares in the financial area. For the same day, the 27th of November, makes a 481 round number open. And then goes to 491, 10 points higher. And here it is at 450. I'm taking this seriously. Daily charts first. Dailies will dictate what the weekly charts say. So it's having a great move up. Anyway, this is my list, and I keep it there just because I keep it there. But most of the time I forget to look at it because I'm looking at many other things. All right. So now the question was IWM, Russell 2000. Let me show you this. You see this large arch formation that I drew in with the left side, right side price time match? Look, it goes all the way to 244.98. Let's go to the low that was made at 217.37 in October. And let's go to this one right here, which is really where I made the measured move. And now it's got a little cup formation, right? An arch formation here. This can combine as one. It could be two, one arch, second arch. So this is saying right here that 244.98 was the high in November, which is exactly 3 years before the previous high of 244.46, less than $1 away after going down to 161.47. So this move now is a little different to the second bar after the November 2021, where there was inverted Chapman wave, red Roman candle, and we closed inside it, but the next month there was a horrible candle below it. So this is the third month. Is this the third month match with a sharp pullback in the monthly chart? Because it's also got to a peak D. Well, you have to look at this in the context of, first of all, the weekly made this big arch with a doji candle high. That's always a sign either of a continuation pattern like here in the middle, or a reversal candle, which turns out to be a reversal candle. But the 9 hasn't closed under the 14. So I'm looking at it and saying there's still some residual strength in the weekly chart. Let's go to the daily chart. The daily chart says, okay, we know these patterns very well. Let me just expand it even more. What are we looking for signs of either a continuation down or some kind of reversal up? Well, you've taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 sessions to consolidate and to rebuild strength. Well, the histogram in the MACD has improved a little bit. The stochastic is a little higher. It's not great because it's still at 16%. On-balance volumes run up quite nicely. But the 9-period moving average, look at the distance between the 9 and the 14. That is big. To get that pink 9-period moving average to cross positive, you would have to see a move into the high part of this ugly candle of the 17th, of the 18th, with a high of 233.08 and a low of 218.92. 18 points, I mean, that's huge. So I just see this as going nowhere. It isn't breaking down. Now, if you know my patterns, you remember this pattern right here? Oh, I didn't mean to do that. What did I just do? Go back. Whew. No. Thank you. Good. Okay, put it back up there. A little finicky, huh? Trying to make me nervous. So have a look at this. You remember this pattern in a stock that we own? And we went through it in great detail, and it followed almost like it was scripted. And that was the Chapman wave stalk leg formation. So look at this. It comes up sharply, and then it makes an oval pattern and then breaks to the upside. This is Chapman wave stalk leg. He has the leg, he has the body, he has the neck, he has the beak. All right? Well, I could do this. I could say for the IWM, that it is inverted, that you've come down with a leg, and now you're making the stalk formation right here. This is the body. So I'm going to put this in because it's inverted, and I don't often do the inverted, although obviously if it can go one way, it can go the other way as well. And all I'm going to say is that I'm putting in just as a guide, just a kind of a template, and then I'll talk about the rest, because a lot has to happen. We are long. It's all the way down from here. From here. From there, long. Just at the August low. But it's not acting well right now. I'll be right back. Basil Chapman, Tiger Ignitions Hour.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So, in other words, just to make it as simple as possible, IWM, is in a consolidation phase, hasn't hit the 216 200 period moving average, considering that it's been consolidating since mid-December. This is good action because it hasn't pulled back, making lower highs and lower lows. But in a very short-term context, this is very important. By, I would say, no later than Tuesday or Wednesday of this coming week, it needs to at least attempt the 226s, preferably 227 area. That's going to be very important. So I hope that makes it clear. And certainly going to 216, that 200 period moving average says, now it's starting to weaken, and that is going to be detrimental to the weekly chart as well. So far, everything's just holding, okay, barely, but holding in terms of it using this particular beginning of January phase as a bit of a springboard for at least a decent bounce. That's what I'm saying. All right. Next question came. So SMCI earnings on the 6th. SMCI, let me see. Question came in. SMCI is trading at up 64 cents at 30.70. So this is the one that had all those round numbers a long time ago. But with I've lost some of the data, so I can't really do anything about it. But other than to say that it made a peak D with a 48 round number. What was that? 48 round number high. Oh my goodness, I forgot to put that in as a high. 48 round number high. Amazing. That's just a recent high. The 122.90 was the major high back in the beginning of 2024. Now it's at 48 round number high at peak D, and pulling back it's at 30.57. This is a problem. So the other one I want you to look at, what's the one that has the Bitcoin? SMCI. SMCI on the 6th. This has earnings on the 6th. All right, it doesn't matter. Whatever it is, it doesn't look very good right now. This is SMCI is Super Microcomputer. And what's the one that has all the Bitcoin stuff? MSTR. MSTR, thank you. I should have known that. I've said that this one's it's a real problem. It had a high of 543.00, round number high on the 23rd of November. It's trading at 313 right now. So, and it had a 317 low just recently. So I'm just looking at this and I'm saying, wow, they've been putting extra money to work in Bitcoin. They've got to be careful. I mean, this is 300. So 285.01 was the low. All I can say is this. The weekly chart is still looking positive, but if this thing goes under 282 to 275 in the next week, that's going to be a big problem. So right now, it's surviving okay. All right, Avagio, that's Broadcom. AVGO, question about that. AVGO is trading. Yeah, look at this. 251.88 was the all-time high on the 16th of December. Gosh, those December highs in all these different indexes and stocks, very important. And then it had a pullback, and then it went to 240 open on the 240 open on the 26th, and then it pulled back and at 245 open around about the 31st or so, and it's trading right now at 230.97. So that just says to me that the semiconductors are doing okay, but that's all. They're in the middle of the range and they just stuck. So AVGO, I'll tell you exactly what I would look for right now. This is saying to me upside is kind of limited. If it closes above, it's at 231.30. In the next week, if it closes above 240, that's actually very positive. It says, boom, it could very quickly test the 251.88 level. But if it closes under 222, it's at 231, closes under 222, it says, anticipate at least a rectangle, sideways consolidation, taking a few weeks in the weekly chart. That's what I'd be looking at. I drew it in, the flag pattern right there. Okay, next question came in, and I did the FXI, XPeng, XPNG. No. Well, I can't remember that. I don't know why I didn't write it down because I always get asked. I want you to look at Questions came in. Questions. Oh, XLE. The XLE is the S&P Select Energy Spider Fund, doing very nicely. Peak A, Peak B, in leg C, and 89.76 would be my target. It's at 87.54 right now. If it can just, the high of the candle, ugly candle of the 16th of December was 88.97 and the low was 87.19. If it can get into, if it can take out the 88.97 level any point in the next 4 to 5 trading sessions, it makes the 200-period moving average that it broke down from back in early December, and now that level is a declining one, and it's at 89.76. It makes that a target. And the stochastic needs a lot of work. It's at 36%. I can't put, technically I should, but I'm going to wait a day. I should put in an up arrow, but I need that stochastic to be higher. So I'm just saying right now, technicals are improving, but not good enough. And that 9 has still got a lot of work to do to go positive. Yes, XLE I like. I said the other day that it's kind of in a range. It looks a little, Exxon looks a little like this. Look at this. Look at the right side pattern. Look there. And now look at it. It's almost the same as Exxon. And Exxon had a much deeper pullback. It's also in leg C, maybe a peak C today. I can't give it an up arrow yet. This is not as good. So XLE is doing very nicely because I think there are a lot in that whole energy sector that are starting to do very much better. Good. Okay, that was a question there. Oh, I didn't tell you what to look for if it failed. XLE. The XLE will fail if it closes under 85 in the next 2 sessions. Not today, that's Monday and Tuesday. If it closes under 85, it says, oops, failure. But right now, it's doing very nicely. Then I had a question about, what was, where did it go? Yeah, uranium, RUNM. You know, this has just started a very nice move in the daily chart. It was lagging and doing very poorly, but over the period of the year, I'd say that it should close towards the high of the year. It didn't, but some of the uranium stocks certainly did. Look, CCJ, just check this out. CCJ is Cameco Energy, and Cameco is up today, up 67 cents at 52.63, but it made a high in the 62s and then dropped sharply. But for the year, in December, it actually was much closer to the all-time high. Not bad. I'll be back in a moment. Basil Chapman, Dows of 201.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. And he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, it's Plovin Corporation, AI-powered software and tech helps connect customers. Leg E in the monthly chart, huge move, just as this is parabolic. And then it stalls at a peak D/B, maybe a D in the weekly chart, and it hits 417.64 as an all-time high with a 378 round number open on the 6th of December. And here is a 344. This is just going sideways in a rectangle formation. Invariably, the longer you go to the rectangle, it's distribution, and you can expect some kind of a pullback. So 291 is the 100-period moving average. I'm not going to even talk about that right now because it's stuck in the range, but it's just stuck in this range. If at any point it goes above 352, that's going to be good. It had a 370 open about 3 weeks ago. So I would just say that if it goes above 350, that's a good sign. Closes above 350. But if it closes at any point in January below 308.13, I think it's got all of that becomes a resistance area. Okay, so real quickly, I was asked about the 1-minute chart of the E-mini, because this is the technique that I'm showing, Chapman wave methodology. Failed on Alcoa. We had that. I was hoping that it would work. Hope is not a good thing, but the technicals had improved, and I just gave it 2 chances. It's just a pity because Alcoa, I want to see Alcoa. I want to see the deep cyclical start to work. Gosh, I can't believe it. Look at this. This is very nice. Walk in the 9-period moving average in the 1-minute chart. It's trying to tackle the new leg up in the 5-minute chart, and finally it'll get, remember, peak C1, C2 very often actually gets to a D, and then you have to reassess. It's trying for that right now, so consider that. Let me just move this away. This is the one with automated resistance support levels. So that's what we're looking at there. Good. So there's the same technique that I'm talking about in the charts. Let me show you Alcoa and why it's disappointing, because Alcoa, and I said to myself, why on earth would Alcoa in this environment start to work? But the chart was slowly improving, and I wanted to give it a chance, but look at that big red candle. That just says, wrong. And it went to peak A, held very nicely in the H pattern. I thought if there was going to be a lowercase h to a lowercase m, today would be the chance to go above that previous high of 39.21 on the 24th. It held the 200 period moving average. It went under a little bit, but it's kind of like a magnet. It was above it up until just a moment ago when it pulled back like this. And now the 9-period moving average in the weekly chart has gone not good. There was a chance, and I wanted to see it move because if Alcoa started to move, that could start to help the steels. Alcoa's aluminum, steels are looking terrible. So that's the reason why I'm saying I am cautious, selectively long. We remain. I like our position, the long positions, even though some of them have pulled back a little bit, but we've got in very nicely. But most importantly, I think if they hold, those are positions I'm going to add to, and we'll watch them very closely. Now, one of the things also that comes up is Bitcoin is not failing. It's not breaking to new highs. It's had a spectacular move going from the 60,000s to the 110,000s. So you can expect some kind of a digestive phase, and that's exactly what it's doing right now. But am I saying that the high at 110,180 is the high? No, because I don't have that indication in the weekly chart. That is still a very strong 9 over the 14. The monthly chart is very strong price-wise over the 9, and the 9 is over the 14. But that can still pull back very sharply. But I am saying I'm looking at it. Did everything we were looking at, the cup and handle pattern, Chapman wave cup and ladle to D. Well, it not only went to D, it went to E. Now it's pulling back, but it's holding very nicely. Question came in about LEAS. This is LEAS quantum computing, Seal Square, doing very nicely. It's down 32 cents right now at 837. I've got this as a peak F at 11.00, round number high. Gosh, 11.00. Okay, so it's pulling back, digesting gains. This is in a very speculative area, but once the speculative area becomes a kind of a known and starts being talked about, even if it's a click, a kind of a click, it's just a kind of a group, and the group is broadening until it becomes a general public thing. I haven't heard general public people talking about this. This is in play. And it's above the 200-period moving average, so and it's a leg C, probably a peak C today in the weekly chart. It should still go to a D, so it should still go above 11. But what do you do at 837 when on an intraday basis it could pull back 1.5 points? I mean, that's 15, 16%. You say, I like this. It's in an area that I like in the sense that it's in play. I'd like to be in it, and I'm prepared to put up with the vicissitudes of small amount of money going into this, and it could go anywhere. But my goal in this particular instance would be for it to go above 11, to go to leg D in the weekly chart, then I'll reassess. It's not even a leg A in the monthly chart, because the bar that made the low cannot be the high. You have to wait for a trough to form. This month is forming a trough. So if this goes above 11.00, starts a new gray leg A in the weekly chart, monthly chart. All-time high was when it came out as an IPO, screams up to the 28 area, and then comes down all the way to pennies. All right, so it's done very nicely. I'm talking about LAES, Seal Square Quantum Computing. Okay, next question I had was, where did it go? FNMA. Oh, I looked at this the other day. Peaky, and it's doing very nicely. Oh man, it was on my list. I forgot to put it in on my newsletter because that's the only way I get to see it. I'm going to do that right now just so that I can remember what's going on. Make it for Monday. There we go. Click Monday. FNM. Okay, FNM. All right, so we're looking at Fannie Mae, Federal National Mortgage Association, Fannie Mae, leg F in the weekly chart, monthly chart, leg D. It finally got to that D. We were talking about it for so long. It's gotten to that D, and it's gone to an A. There's peak C1, C2, but this is a brand new A. That's also A. This is B. It's in leg C in the daily chart, still very strong. Yes, good eye, good eye, good eye. You've been in this for a long time. Okay, can I look at T? Yeah, the support now is at 353. Well, today's low is, yeah, I'd say 353. It looks like it wants to get to the 420s. Yeah, very good. TVGN, I'll look at that in a moment. TVGN is trading at 1.06, $1.06%. I'll be back for this Basil Chapman Tiger Emissions Hour. Dow's up 225.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
I think this is Tevagen, if I'm seeing it correctly. Buyer Holdings, TVGN is a symbol at 1.06, up a penny. Yeah, this has to do completely with news. Biotech, absolutely. Technically, there's just nothing here. Personally, I would just not even touch this because I don't see any strength. I see sideways movement. But when it gets the news, it moves very quickly. So all I can say is if you have started a position, you're just holding it because you think it's got something to come with the announcements promising biotech. Then the moment it takes out the high of the 24th of December of 1.27, I would add to the position. And then you've got your core position and you would add to it, and that would be your trading position. And I would take little bits off immediately and try to let it run as much as it can and have a rolling stop, just it's the only way I can do that. Because if this takes out 0.95 in the next day or so, closes under 0.95, it's just kind of stuck. And that's what it does. All right, so with that said, volatility index, look, the VIX index, I had spoken about this before when I was in Tommy's show earlier on. Yeah, it's trading down 86 cents at 70.07. I'm looking at this, and I have to tell you, I can see the rotation through the sectors, and we tried Alcoa. It didn't work. Just not going to touch that again for a long time. I mean, at least until it does certain things. And that's that whole area. Even GM, which of course uses aluminum. Look at that failure pattern, dreaded H pattern. There are just too many of these. So shorter term, now it's becoming more important to just pick anything with strength that's been working well in this environment. And we've still got some that are doing really nicely in our portfolio. I'm going to add to those rather than to maybe try something very different, unless it's just a screamer stock under $10 that we can use as a trade. So be careful, but my weekly chart so far, they're holding really well. This is not the bear market that you would expect at a major top, but it is on a daily basis, and that can go into January, which it's doing right now. Have a wonderful, check out my weekly daily newsletter. Have a wonderful rest of the day. Stay tuned for Steve Rhodes and all the great